what you want to be able to do is to you can borrow from it if you need to. So you guys, that's pretty much what I wanted to share with you. Um, wanted to share with you today. If you have any questions, go ahead and put in the chat. Let us know where you're chatting from. Put your state in the box. Yeah, what state are you? What state are you? Okay, a few of you. Okay, Rosie from Indianapolis. Millie. Shout out to you, Millie, too. I see the heart. Millie there in Milwaukee. Okay. All right. All right. Somebody asked, what are your qualifications? How do companies determine what premium you pay? That's what one of the questions are. So I'll go ahead and ask that. Listen, every insurance company is going to look at your age, most definitely. The older we get, there's an algorithm, and basically, research shows that most men are going to live to about 65. I know that doesn't sound like that's too that old, you guys. I'm sorry to say that. Then women about 75, or maybe it's men 75 and women 85, something like that. And the closer we get to that, so if you're 55 or 65, the closer you get into that age, the more the insurance costs, right? Because they're taking a risk. Insurance is about risk, right? So they're thinking if you're that close, you're 20 years away from that algorithm of making it look as if you're going to die. The expected time frame that you're going to live based on the statistics, then we're going to charge you more. So what was that? Sharon, the qualification is age for one, right? And I tell people go ahead and get covered. People are 30-ish and they'll put it off. Oh, I don't need it right now. I don't need it right now. First of all, you already know I've already been on the soapbox about what could happen. Life happens, and then also how you can start saving when you're young. But every year that you put it off, I know yesterday I did a lady's premium, and she has a term, and she was like, should I go ahead and lock it in for a whole life? Well, if you can afford it, let's say a term is $60, right? Typically, if you get a whole life for the same amount of coverage, it's going to be double the premium. So your premium should be about 120, right? It depends on your budget. So my point is that age is good, but when I looked at her age 10 years later, and I put in a quote, and that's not given inflation as well, because we know insurance companies are businesses and they could change anything as well. But I put in her age, she was 55. I put in 65 just to kind of see what her premium was, and it was $10 more, right? So 10 times 12, 120. She's going to pay $120 more in 10 years for that same premium. So my point is, one of the qualifications is the age. You want to go ahead and get your policies when you're young. You also want it. The second thing they look at is your health. I don't understand those companies. Well, I do understand the companies that tell you it doesn't matter about your health. It doesn't matter. That's not true. Those companies may not have the best payout, or they may not have living benefits, but they look at your health as well. I also want to see if you're a smoker or non-smoker. Why? Because typically most people who smoke are going to die early. They're going to end up with cancer or have some other issues. Not all, but that's what research shows. Not me. I'm not a doctor. I'm not a financial advisor, and I'm not a lawyer. I'm just an educated person bringing you some high content value. And then the fourth area, the qualification, the companies are going to look at your prescriptions, not what prescriptions are you taking. I love my clients in Georgia. Well, they say Georgia, and they say, I'm not taking anything. You're right. They don't have to take the high blood pressure, but did the doctor prescribe it to you? So they're going to look at the prescriptions that the doctor prescribed. Because if the doctor diagnosed you with something and prescribe you with something, that's what the companies want to know. What kind of risk are we taking, right? And then the last thing is hospitalization. Have you been hospitalized in the last 5 years, right? They want to know that because they want to know what they're dealing with. If you had a stroke 5 years ago, cancer 5 years ago, they want to know, could this reoccur? So that's it for the qualifications to answer your questions. And then the last thing, you guys, I told you that I wanted you to watch the entire video because you want to know, is this company creditable? Don't you love it when they say, oh, you're only going to pay $10 for $100,000? Yeah, right. Well, excuse me, baby, who are you? What are your ratings? A lot of people don't know this. You can go to this website, right, to check the ratings on insurance. It is ratings, ratings.am, like AM and PM, ambest.com. Ratings, ratings.am, best. Ratings at AM Best. AM Best is the company or the agencies that rate insurance companies. For instance, I have one policy with Mutual of Omaha. I'm sure their ratings are at the top. I think they may rate them up to like 5 or whatever, but they're up there, meaning that these are creditable companies and they're going to pay out. That's what you want to know, you guys. All insurance companies are not equal. You know that. Let me just put it this way. If you have Geico, Progressive, State Farm, Allstate, and Navy Federal or whatever, think about it. All of them are not the same. How do they rate? And when it comes to your life, don't you want the best company, right? Who's going to pay you? Not 1 year later, they're still trying to determine if we're going to give you the money that you put into the company. You don't want that. Like my friend who died, and it was a year later, and they still had not paid her. So you want to go on there and check out the ratings to make sure that these companies are going to pay you out. You know, when you say Globe, or I don't know what they call it, Globe, Geico, well, that's auto insurance, but Globe and other places that say it's only $1 for the baby. You know, what you need to do is you need to be able to look at what they're offering. You really need to get a qualified life insurance agent who is knowledgeable, like myself, who can look at that policy, determine what it is. I could tell you story after story when I was working with my clients in Florida. I'm in the homes and they say I'm covered. And you guys, they really meant well. These women, I mean, they bought their own home and, you know, they come out. I said, well, do you mind if I do? And this is what you want to do, a policy review with a qualified life insurance broker, because you are aging. You don't want someone just trying to sell you what they have and switch it out. That's not what we're about. We're about understanding your needs, right? First, understanding your needs. Are we trying to get, what is the goal here, right? We want to get insurance to help our children. We may just need whole life for your children if you just want to put money away. You may not be interested in the compound interest, right? That fluctuates with all the other bells and whistles. For a term, you know, somebody may just have mortgage insurance and they don't want to pay out all the other money. They may have life insurance and they just want strictly mortgage insurance. So we're just going to do a term for 20 to 30 years to cover my home. You need to know that. You need to know this company is going to help me meet my goals, not just take money from me. And you may need several policies. I have several policies for different things. I have one in the event something should happen, I'm just going to cash it out, right? I have another one that in the event, if that happens, I still will have insurance, because if you have cancer again or a stroke, that company is not going to touch you. Nobody, I should say, no other company is going to give you coverage for at least 5 years. Well, as you get older, when you hit 55, which I have not gotten yet, shout out to my twins that are 30 something. Anywho, so you want to make sure that you meet the goals, and then you want to make sure that you have the type coverage that you need, and you want to make sure that they're going to pay you. So you want someone to be able to look at that policy and do a policy review for you, right? So when I was in Florida, I asked the lady, I'm sitting in a house, beautiful home. She said, I'm already covered. I said, do you mind if I just take a look at your policy? This is so important. She went into her bedroom, you know, where they keep all the policies somewhere hidden, you know, with the social security cards or whatever. She came back out with her policy, and I'm reading over it, and I said, this is accidental. You guys beware. Accidental policies, most of them will only pay you if you die in an accident. And you guys, her policy said if you die in a plane, it didn't even say just like a car accident. It was accidental. The lady thought she had life insurance. So it's so important to know what you're getting, because a lot of times they'll just say it's just $30, and you're like, oh yeah, $30 for 100,000, good. No, but what type of insurance is it? So my point when I said shout out to y'all who go to church, I was behind when my ex damaged my credit, when my ex destroyed some things, and I had to learn how to read a credit report, or I found out I was financially literate. I had to learn about taxes. I had to learn about credit. I had to learn how insurance worked. You guys, I didn't have time to play around anymore. I didn't want to be the average citizen. I had gone all these years to get this education, right, and knowledge, but I didn't have financial literacy education. That's why it's so important today that we need to know how insurance works. We need to know how to pay ourselves. We need to know how to budget, save, invest, and particularly in ourselves, and protect ourselves. I took time out, and I'm not suggesting this for anyone, and you can call me a heathen, but I know I love myself, and I know that there's some things that I had to do for myself that God or the creator or whoever, you know, nobody was going to do this for me but me. So the same time that I used to get up, put those clothes on, put my makeup on, drive over there, do the hallelujah and all of that, and come back, that was 45 hours a day. I just used every moment that I had outside of work and taking care of my children to learn anything I could get my hands on that had to do with financial literacy, anything that has to do with money, anything that has to do with credit or taxes. Or so I started off with a tax course. And in that tax course, I met Rob, who was a nurse who had now become a life insurance broker for a company. He talked about this index universal life policy. I gave him that look, you know, is this man trying to scam me or lying to me? You know, he was a creditable guy and he introduced me to some more. And I was like, I've never heard of this. And that's when my world opened up because I realized just because I have not heard of something, just because you haven't heard of something, just because you haven't heard of something does not mean that it doesn't exist. I had to do my homework. And I, anytime you want to grow, you're going to have to take a little risk as well. Now, these companies have been out here. If you go to, that's why I'm telling you this, ratings.invest.com, you'll find the insurance companies that we represent: Mutual of Omaha, Fidelity and Guarantee, Emeritus, National Life Group. They're all out there. These are rated, top rated, A companies. Well, after becoming an insurance broker, I worked with groups at hospitals, doctors, and nurses and helped them with their group insurance. So I learned group insurance. Then I worked with Combined, who was really a company that worked with military people with like buckets or supplemental insurance. And that's, again, it supplements life insurance. So I work with their company. So I have a conglomeration and a list of experiences that I add to my repertoire in insurance, but I had no plans on being right here where I am right now. 20 years ago, telling my age now. Remember, I'm only 30 something, but 20 years ago, I was teaching college, right? Never thought I'd be. How did I move from healthcare to finance care? That's why we Dr. Money. We can handle both of these. But I have over 15 years in this area, over 20 years in healthcare, and over 15 years, around 15 years in um, insurance and financial literacy. So I hope that we've learned something today. We definitely realize the importance of having life insurance. Want to make sure that you're covered. The best thing you can do is get started. You don't have to have 200, 300, 400, or a million. If you start at 20, listen, 15,000 in your hand if something should happen, or for your loved one if something should happen, 20,000, that's better than nothing when you have to come out of your pocket and bury that person. It gives you time to grieve. And if not, it's still money. Do what you can, set your goals, but do get covered. Get some coverage now, right? And then you can always increase it, you can always grow. But listen, get some financial literacy. So we thank you for joining us today. If you haven't already subscribed, please go ahead and subscribe. Share this link with someone else. Hit the like button. Their like buttons are free, you guys. Go ahead and hit the like button. You have any questions or comments, please pop them down there. Just be respectful to the others and considerate. And remember, you can't change the economy, but you can change your cash. I'm Dr. Money with the Dr. Money Network. And we'll see you next time. Until then, peace.